Hello guys, welcome back in today's crypto technical analysis, and today we do as usual a multiple time frame analysis for BTC. However, before we start, I've got a small request from you all. If you guys are learning and enjoying from the contents, do not forget to like the video, and if you're new to the channel, subscribe and activate the bell so you do not miss the accurate market updates. So I think it's very important to mention that the market is expecting, as long as we're going to be above $30,000 and $33,000, they're expecting that we're going to get back to the bull run. However, I can tell you that with a high confidence that the resistance levels based on a weekly time frame is not changed. So their resistance levels I can tell based on a single time frame. However, based on a weekly as well as the other higher time frames, without claiming, as I keep mentioning in the previous videos, 35,000 in the first place, last resistance is going to be 36,500 levels. And these levels going to give us to get back to the consolidation based on a weekly time frame. And therefore, I would say it is very early for us to talk about the continuation of the bull run. And from the lowest, which was 17,500, we saw about 40% pump in the market. And you may be aware of these Fibonacci levels, which is a mirror image of the 618. We've been following these Fib levels since we got rejection right from $69,000. And we expected that we saw some sort of a reaction from 678, the level. However, as I said, this is not the major resistance. And at the moment, again, we are facing, as I keep mentioning via Twitter, the local resistance based on a high and mid-high time frames. So we have to do a further analysis in order to see the local resistance levels based on a different time frames. Moving on to a daily time frame. Based on a daily time frame, 26th of November was an important level. With this candle, we broke and retested perfectly to the dollar, and since then, that was a first dump all the way up to $33,000. We did a bit of consolidation around here, and then it started a continuation of the dump, and we saw all the way up to $17,500, and that was exit level. 60,000 and 59,500 levels were based on a higher time frame. Along the way, we had 52,000 and 48,000 levels were the higher time frame, mid-higher time frame levels. So we saw massive 70% dump in the market. And still, with the current price action, if we're going to calculate it, it is 60% dump. However, still, we do not have an exit signal. Based on a daily time frames, the support levels are the same based on a higher time frame that I mentioned earlier on. However, the resistance levels that we have to keep an eye on is going to be the followings. At the moment, $25,000 is going to be immediate high time frame as well as the mid time frame resistance, and I'm expecting some sort of reaction from here. However, it doesn't mean that we have to stop in here. And then the next resistance that is going to be, as I keep mentioning, once we broke $21,000, we saw 15% pump in the market that I updated via Twitter in the recent posts. So $25,000 is going to be first resistance, and the next one is going to be $27,200. Without claiming $27,200, $27,000, it's going to be early for us to talk about that. The daily time frame will get back to the consolidation zone, and therefore it is very early, and there is no need to panic if you manage to short from $59,000 and $52,000, even $48,000. So it depends what type of trader you are and the time frame that you're trading. Based on a daily time frame, as I'm saying, it is very early for us to talk about the bullish scenario as well as the trend change. And moving on to a 4-hour time frame. Before we do a further analysis, if you want to learn all this technical analysis, what I'm showing, and if you want to become an independent professional trader, or you're interested in the institutional trading system, you can message me via Telegram at Magnate8, and one-on-one intense masterclass is available, where I'm going to teach you how to become a professional trader in the market. And it only takes you 5 to 10 hours to master this all. And during the course, you will learn day trading, i.e. scalping, swing, and as well as the long-term as an investor trading systems. So my bias was based on a two system that I'm using. Based on a 4-hour time frame, as I said, we might get a fake out. And as long as I don't get a confirmation, I'm not interested to exit from my short. So if you remember, higher time frame resistance was between $52,000 and $48,000. That was an initial short setup. However, if you're a conservative trader, $45,500 was a sweet spot to short or exit from the market. And as you can see, each and every single time we approached to the smart money or the red one, we got a rejection. And we couldn't manage to exit from these three lines. If you're even a conservative trader, we saw massive dump, which is a 60%. And then with the exit, it depends, 48,000 you shorted, exited from market, or 45,500, over 55% average. It allowed you to exit with a profit. So at the moment, as soon as we broke and claimed it, as you can see perfectly, we got breakout, and to the dollar, we tested the support. The resistance became support. And then since then, we started pumping and we're going up. At the same time that you can see, we've got a market structure change based on a mid-time frame, that the smart money line started printing a higher highs and higher lows, which is a classical definition of the uptrend. So this is bear in your mind based on a mid-time frame uptrend. And it's very early, as I said, based on a higher time frame, bullish market based on a higher time frame, or continuation of the bull run. So at the moment, as I said, 24,800, $25,000 is going to be your first resistance levels. And I'm not expecting to get out from the short as long as we're going to be above without losing the red one. Ideally, I will get prepared once I'm going to start seeing that we're going to lose the white line, which is a smart money line. Once we started closing below, then I will be prepared to exit from the market. The way I did it, as you can see, that was a fake out, that there was no reason to exit. As soon as we claimed it back, and we broke it, we held it about 21,000. As I said, claiming 21,000, 21,500 is going to give us a beautiful long setup. So since then, if you manage to enter from $21,500, as you can see, all the way with the current price action, we're up nearly 15%. 2-hour time frame. Based on a 2-hour time frame, as soon as we broke and claimed this level, which is at 20,500, 20,700, ideally 2-hour time frame started giving us a bullish signal. And therefore, you need to keep an eye on, if you're a swing trader, you better avoid this type of fake outs based on a lower time frame, which is a 2-hour and below. So as I said, without losing $21,500, $600, it's going to be early for us to talk about the bearish scenario based on a lower time frames. A 1-hour time frame is under the bull's control. I'm not going to cover 1-hour time frame on this episode. I played level to level. The levels are clear. We came to an end of this episode. If you guys enjoyed it, do not forget to like and subscribe to the channel. Thanks for watching, and I will see you in the next one.